Hi guys, this is Dor from the Sovereign Trader channel. As every Tuesday, I'm going to record a video where I go through my watch list for the coming week. At this point, actually in this video specifically, I won't talk much about my open positions. That's because we had a bank holiday yesterday. So I'll start off, but before that I want to go quickly through the definition of each list in my watch list. I have the long list, which is not long in the directional manner, but long in regard to quantity, as you can see. The long list are setups that are a week plus from maturing, for example, EXR. Okay, then I have the short list. Once again, not in a directional manner, but these are setups that are a week minus from maturing, or at the range of about 3 days from maturing. The active lists are setups that are at least at or beyond the pattern boundary, or are actually at the entry point. So this is how I divide my watch list after my analysis of charts each week. Once again, I go through thousands of charts. So the US and Canada, we have Japan, residuals, once again, is some indices and some forex, a bit of cryptocurrency. We have Europe, Asia Pacific, so quite a decent amount of charts that I go through each week on Sunday to Monday. And in Tuesday videos, I'm actually going to go through the short and active list, because the long list is quite long. And not only that, these are setups that are not so relevant because they have some time to mature. One thing that I didn't say is that once a setup is getting to the active list and is becoming relevant, which means it's at the boundary, beyond it, or at the entry price, at the entry point, then it becomes relevant, and then I will apply my setup criteria to it. And I'll say another thing: most and almost all of the setups that I have in the long, short, and active list are, in a sense, answering some of my criteria. Once I get a setup to the active list, I want to choose those that are answering most of the setup criteria and have good context to them. So let's start off. So we have SJ, it's a rectangle at all-time highs. In a sense, it's actually might be some kind of distribution pattern, and maybe a path to the downside. So far it doesn't look like that. We have strong reactions from both sides of the rectangle. We have also a strong move into the upper boundary, which is something that I like to see and actually prefer to see in setups that I want to enter to. Still a bit far from the entry point, so we have to wait. A Japanese stock, once again, and quite similar. We are coming at all-time highs in an uptrend. So far it seems good. We are challenging this resistance level 3 times in relation to 2 times at the lower boundary, which means that the buyers are more aggressive. We have some kind of cup and handle on the daily, which is a confluence to the forming rectangle, and might add some reliability to the pattern. Okay, so this is a decent setup. It's head and shoulders bottom. It's an oasis, which means it doesn't have any kind of price action in the range or the price range of the head and shoulders, which is something that we like to see. It's well defined. In a sense, we have abbreviated shoulder, which means that the right shoulder is a bit higher than the left because of the aggressiveness of the buyers. In this case, might be the opposite if you are looking at head and shoulder stop. Once again, we start to play with the 200-day EMA. I want to see clear hold above the 200-day EMA. Along with that, a firm close above or at the 3% entry point. CSTL, another rectangle coming off the bottoms, holding above the 200-day EMA for quite some time. You can say 5 weeks, and in a sense you can look at it as some kind of a bull flag. So we have a strong bullish weekly candle with a few sideways doji bars closing at the upper range of the bar, which is quite good. We can also draw some small range here if you want to mark this idea of some kind of bull flag. Those looks good. I do want to see a firm close above or at the entry point, and especially above this wick, because I want to prevent any idea of sweeping the eyes and then coming back to the pattern boundary, or in the worst scenario back within the pattern, which will kill the trade. Another Japanese stock. So this is a bit more complicated setup. So you have a rectangle, clear defined rectangle, and we have a mega pattern, which is a descending triangle. Okay, it comes after some time of uptrend consolidation, but you can say that since April 2020 to this point, or to this top, we've been in some kind of an uptrend, all the way at consolidation here and here and here, but we did manage to push higher. So it will be a legitimate descending triangle, which comes in the form of a reversal and not continuation pattern. We already closed very close to the 3% entry of the rectangle. I do want price to close firmly below the neckline or the pattern boundary of the descending triangle. I'm not looking for 3% from this point, and that's because we can see that it's far below. And also I want to, in a way, trade the rectangle, but still pay attention to the idea that I have pretty strong major swing lows here, and I don't want to find myself entering the position and then being pushed back to the boundary or into the pattern itself. So a firm close below this support level or the pattern boundary of the rectangle of the descending triangle will do the work for me. PDFS, another rectangle. Nothing much to say about it actually. 2 touches on the lower boundary, 2 touches at the upper boundary. I can say one thing that I don't like about this setup is that I don't have a confirmed second touch. Okay, so we have 1, 2, and 3. This should be the fourth, but I need to see some kind of rejection from this to be sure that this is respected as a resistance level and I can be confirmed that this is a rectangle. Because for rectangle I want to see 2 touches at the lower boundary, 2 touches at the upper boundary. But it's not just touches, as you can understand. I want to see reactions. So we have reaction and another reaction. But first reaction from the upper boundary and not yet a sufficient second reaction from the upper boundary. So far this setup sits at the shortlist because it's quite sure it in a sense close to mature in a few days, but if it will get to the active list and it will not answer the idea of second rejection from the upper boundary, it will be cancelled and probably I'll let go of this setup. Okay, another ascending triangle coming off the lows. Decent setup actually, looks good, has no some kind of price action, no consolidation preceding it, which is good. We can see that we had a decent head and shoulders pattern right here, which is quite nice to see. Yep, which us down, and actually the measured target, if I'm not mistaken, was hit. Yes, it was, and reversed specifically at the profit target point. Some kind of magic sometimes, but yeah, it's just amazing that it works for so many years. For those of you that read Technical Analysis by Schabacker and the another book, Technical Analysis of Stock Trends by Edwards and McGee, you can see that they are printing charts there from 1940 or something like that, even some charts from the 1930s, if I'm not mistaken. It's almost 100 years since then, so it's fabulous to see that classical chart patterns are still working. Okay, another rectangle, which is quite beautiful. We can see quite a lot of top reversal patterns on the Japanese stocks. Okay, we'll take a short look at the Nikkei for a moment to see if we have any kind of beginning of reversal or change in trend. I'm saying a lot, but actually it's me memorizing from other setups that I probably saw in the long list, but so far the other two are in a sense aiming for the upside. So taking back some of what I said about yeah, it's still a good setup. Let's see the Nikkei. So we have quite a decent correction here. Okay, it's not a move that we can ignore. Okay, let's see, it's around 10% from the top, not that a lot, but still can't be ignored. We might be forming here a lower low. Okay, let's look at the weekly a bit closer. Maybe forming a lower low, maybe a cap and handle, maybe a descending triangle, or maybe we'll continue higher. But we are seeing some weakness in the Japanese in the Japanese stock index, the Nikkei. So it's also one of the things that adds reliability to short Japanese stocks. Okay, LAZ, nothing specific. It's quite close to the pattern boundary, actually touched it at the market open. Just a wait. Same here, Harmony. We had a pretty strong move to the upside, a V-shaped correction, which you're actually seeing in the stock quite a lot. Here, 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 here. Some might say this is a lower, a double bottom with a lower second bottom, but still price action it looks weak in the last couple of days, last couple of weeks, excuse me. And once again, guys, sorry if my English is not that fluent, but as I said, I believe that along with the videos it will get better. So we had an earnings day and a very strong rejection from the upper boundary. From this point on, we are in a sense operating at the bearish half of the rectangle. Okay, from this point on, so let's say for 7 weeks we are operating at the bearish half of the rectangle. Okay, you can see that here too, 1 2 3 4 5 6 7, getting into the 8th. Can't say the 8th because we just started the week. So it's clear sign that we want to go to the downside. Okay, this is my point. We can see that we have two minor lows here that might be more suitable, some say, but I do prefer to draw the line the best fit where I get most touches, which is 1 2 3 4 5 6 7. Okay guys, so this is about Harmony. TKWY, so it's another well-defined rectangle, but the one thing that I'm not so happy about, and it's a bias, I know that, is that the stock is very much oversold. Okay, so it's at its all-time lows. I would prefer a rectangle to be formed as a continuation pattern, or if we're talking a rectangle to the downside, so at all-time highs, as some kind of once again distribution reversal pattern, or continuation of downtrending of a downtrend. Okay, so like a downtrend, consolidation, another downtrend. But once again, this is biased. I mean, I'm quite sure and quite aware that I should be trading price and price alone, and who knows, stock can go lower. Doesn't mean that if it has all-time lows, it will stay there forever. So this is something for me to keep in mind. This is one of the things that I'm always saying, that these videos are as much for me as they are for you. These provide me with the ability to reflect on my thoughts, on how I approach the setup psychologically. So this is very important. Okay, another ascending triangle, and as a continuation pattern, these kind of patterns, the right angle triangle is more often shown or appearing as a continuation pattern. So this is also a good and well-defined setup. Once again, same as I said on TKWY a moment ago, this ascending triangle is forming at all-time highs. Okay, so it's quite an area. But once again, it is a bias, as I said, and I should be aware of that. Okay. APAM, a rectangle, nothing much to be said. It seems like, at the beginning at least, I'm saying, well, I think I talked about this setup on previous video last week, but it looked like we are going to the upside. Okay. I think, yeah, last week was Tuesday, 21 of May. So this is where I took the video of the weekly review of last week. Seemed like we are going to the upside. We are in a clear uptrend. Okay, some consolidation, correct, but still moving to the upside overall. We are seeing rejection, clear rejection. We had an attempt to break out here and another attempt to break out here. Bad follow through to the upside. We're continuing down clearly, getting back within the pattern boundary, closing the gap slowly with the 200-day EMA. Signs of weakness are showing up. We'll just need to wait. If I see price getting more close to the midpoint of the rectangle, I will move this stock to the long list and wait until it will get closer again to the lower boundary, and then consider a short setup, which actually as an idea seems pretty good. I'm always optimistic. Oh, seems like I had something with the electricity. Just making sure that I'm still recording. Okay, so I just said that I'm always very optimistic that I'll manage to record it within 20 to 30 minutes, but it doesn't seem to work. So 40 minutes will be our ideal time, I guess. Yeah, I don't want to cut. I don't want to cut from speaking and explaining about setups that I think are important. Whew. Guys, I will be back in a minute. I had a jump with electricity and my Wi-Fi is off, so just a moment. Okay guys, I'm back. Sorry about that. Yeah, so another setup with SOL, well-defined rectangle. Can be said at all-time highs, but in a sense close to it. Okay, coming off very clear and defined uptrend. Okay, starting a consolidation. Seems like a good setup. I do like the idea that the 3% entry point is at this point beyond, below all the swing lows that we have. This specifically not, but I'm kind of ignoring it because it's earning day. So yeah. Okay, UWMC. It is actually a setup that should be moved to the active list. Okay, it's been making its way up to the pattern boundary while we are speaking. What I can say about it, it's a clear continuation rectangle so far as it looks like, an uptrend. Okay, some consolidation, probably move to the upside. In this case, if I'm not mistaken, the entry is not based on a 3% but on this swing, major swing high. Okay, so once again, I want to avoid cases where price is moving up. As we can see here, price is moving up, getting rejected and moving back down. Okay, I want to see firm close above this swing high before considering entry. Okay, so that's important. Okay, IR. Once again, coming back to the point that I brought up earlier in this video, we had one reaction, second reaction, third reaction, and I do need the fourth reaction to confirm this is a second touch of the upper boundary. Okay, so until that happens, I will probably not take this position. Okay, Euro Pound, we have head and shoulders. Quite not sure how to call it, and this is a problem, and I'll explain. So in one of the setups that I shown in this video, we saw a head and shoulders that is an oasis. Once again, by an oasis I mean that it's forming somewhere where there is no preceding price action. Okay, so it's not that we have the head and shoulders somewhere here. Okay, so it came down, moved a bit, and then started to form the head and shoulder. Okay, and there is no price action preceding it in the last few months. Okay, at the end of the day, there is price action preceding it, but sometimes, some quite time ago. Okay, this is not the case. This is not the case. And that's the reason why I can't clearly define it as a reversal. It would probably be a continuation, I guess, because we started some clear downtrend here, marked a lower low, marked lower high, so there'll be a continuation head and shoulders. Once again, if it will reach to the active list, this idea of having a preceding price action before the head and shoulders, before the pattern, will be taken into the consideration, and will be, in a sense, a negative point to this setup. Okay, great example, the antithesis of what we just saw. Okay guys, so we have clear defined head and shoulders at the highs very good looking. Coming after a very long uptrend. Okay, we are starting to hug or play with the 200-day EMA. Clear close at the entry point, and I'll be more than happy to take this trade. Once again, we have abbreviated shoulder, which means it has a lower high than the left shoulder. Okay, sellers are more aggressive to push prices to the downside, and once again, the aggressive side in the market is the one that determines to which direction price will go. Okay guys, make it a bit quicker because I want to spend some time on the active list and open positions. So rectangle, we have one reaction, second reaction. Okay, so this is the one, the first point, this is the second point, or this is the second point, and this is the first point on the upper boundary. Once again, we do need to see here the second point from the upper boundary, some sufficient rejection. This is not enough because it did not yet reach the upper boundary, so I would want some kind of correction to the downside and then move it back up. Okay, which once again, a shorter or a less strong reaction in this kind of pattern is normal, because at the end of the day, if you want to break, if price is likely to break to the upside, it's quite obvious that we will see strength from the buyers. Strength and aggressiveness from the buyers will be some kind of shorter corrections to the downside. Booking. Seems like the electricity jump did no good to my Wi-Fi, so we'll have to be a bit patient. Okay, another rectangle, clear once again guys, clear break will need to be above this once again swing low. I know that we had an earnings day where I ignored the candle. In this specific case, I don't want to, and I'll say why. Once again, firstly because it is quite close to the pattern boundary. Okay. Another thing we can see on the weekly that we're having some weeks at the upper boundary, which is okay. But once again, I don't want to be caught in a situation where I'm entering the position and getting back within the boundary. Getting back within the boundary means trade kill for me. Okay, so I want to minimize that. Okay, so once again, one could say, great, we have decent price action here. I will take some kind of a position to the upside. Say it was some kind of I don't know, a pennant or small symmetrical triangle. I'll take the position. Okay, and then boom, what happened? We swept these lows, we swept these highs, excuse me, actually these highs too. So this is something I'm just aware of, the idea of wicks and wicks beyond the pattern, the pattern boundary. So yep, moving on to the next, AVGO, which is actually a stock that I'm watching for quite some time. The price action It doesn't look that strong. Okay, I wouldn't enter at this bar. We can see that the following price action is quite weak. We don't have the clear, strong breakout, full body bullish bar. Okay, that is confirming the breakout in a sense. You can see that I'm not trading with volume, and in textbooks, once again, those of Schabacker and Edwards and McGee, a breakout or another indication for strong breakout is high volume. Okay, full body bars are in a sense signaling for high volume. Okay, but most importantly, they are signaling aggressiveness from the side of the buyers, which is something that I want to see. VWS, once again, we had a sweep here of these highs. Okay, rectangle in a very long consolidation, almost 2-year long consolidation here. Okay, we're having some kind of resistance at these levels. Yep, at this level there's some kind of resistance, which is once again something to be aware of if I'm taking the position. ARGX, okay, another rectangle, actually a good looking rectangle. We are coming from several years of an uptrend, a gradual and slow uptrend. In the last few years, more of a consolidation along with an uptrend. This gap up that formed an ascending and a descending triangle in a sense and took us down, closed strongly below the 200-day EMA. We are holding quite some time below the 200-day EMA. We are forming a clear rectangle here. Okay, it will be a continuation rectangle to the downside. Once again, price should close firmly below this minor low for me to be confident that price wants to continue to the downside, and I will not get some kind of sweep of the lows and again back within the pattern boundary. Guys, moving on to the active list. KTOS is marked in purple because purple setups, these are setups from the active list that I prefer, which means these are setups that are answering my most of my setup criteria, which I'll go through, I believe, in another video. I'm actually getting to the 40-minute mark, so I want to be a bit quick. At the opening, price actually was looking, the day was looking pretty good. This is looking pretty bad right now. We are sweeping these highs, guys. We are forming, in a sense, a shooting star. If we will close that way. So just an emphasis on KTOS. I'll not take the position if I have a bar that is closing at the entry point, which is fine by my strategy, but in this way of price action, this is a no-no for me. ACS. Okay, so an ascending triangle, price is moving up in a hesitative way. Okay, after this kind of strong candle, I would want to see a strong continuation to the upside. Once again, I will need a strong close above this, above or at the entry point for taking the position. Pound to CAD, Canadian dollar. This is actually a good looking trade, guys. Okay, it's an ascending triangle, a continuation pattern of an uptrend, which in a sense we've been in some kind of consolidation for the more sharp once watching it. I did write to myself to wait for day end routine, which I do at around 4.5 hours from now, okay, which is very close to the US close. I'll see how price behaves at this point, and by that I'll decide whether I take the position or not. I will say that I have one of the criteria that I have is preferability for specific classical chart patterns, which means the rectangle is at the first place, then head and shoulders, and then ascending triangle. You're asking why? I said in prior videos that I'm a disciple of Axel Kibar and Peter Brandt. Axel has in his platform vast statistics about the success rate of 8 classical chart patterns, of which rectangle has the highest success rate. By success rate I mean that price has managed to reach the measured target of the pattern. So rectangle has always been for the last 7 years with the highest success rate, and head and shoulders and ascending and right angle triangle have been playing, specifically ascending triangle, and it makes sense because we've been in a clear uptrend in the last several years. So it's quite obvious that ascending triangles are appearing more and actually more successful because they're going with a major trend. And why? Okay, so once again guys, this is a hesitative price action. We do have all the reactions that we need here. Okay, it's a tight range, which means that we'll probably see double the measure target, but I do need to see a clear and firm close above this entry level. Okay, JEBN, once again, another setup that I liked. Looked at it yesterday and it was looking good. A move up, pull back. We are seeing some move to the upside. Not that strong of a follow through, and this so far bearish engulfing. We have quite some time for day end, but so far bearish engulfing is not a good signal. Okay, you might come for another some kind of pullback and then try to make another breakout, and maybe not, maybe come back within the pattern. OFIX, this is another rectangle reversal once again guys. Yeah, so once again it's trying to break, coming back within the pattern. It is actually a setup that needed to be moved to the short list. Okay, AGM, another very good looking setup. It's a tight rectangle. Okay, if according to the textbooks guys, if the rectangle is between 10 to 15% of the underlying asset price, we are likely to see double the measured target. Okay, so it will be double the range of this rectangle. Once again, close should be below this minor swing low. Okay, so far it's looking good. We do need to see a break below the 200-day EMA and the firm close below this entry point. Okay, Okay, so guys, this is another in a sense complicated pattern or setup. So we have a mega head and shoulders which is several months long. Okay, I would say even more than that, probably about a year long rectangle head and shoulders top, excuse me. Yep, almost a year and a half. But it is looking good. It is a head and shoulders that coming with no price action preceding it. And once again guys, by price action preceding it, I mean that there is no consolidation coming into, there is no consolidation coming into the head and shoulders, which means there isn't consolidation at the prices range of the head and shoulders. Okay, so price is gone below the cup and handle that we had here, which is a launching pattern for this bigger head and shoulders. Once again, we do have some kind of resistance that we will need to pay attention to here. Okay, in a sense, this is the best fit line. Okay, I can try and look how we look on this situation. But yeah, this is the best fit line. Okay guys, you can see that from this low, the right shoulder have been formed. Okay, I'll leave this here just to be aware of it. Okay, it is in a sense closed almost at the entry point, but now we are reversing strongly. Okay, usually guys, mega patterns, or if you are trading a launching pattern, that is launching a mega pattern, the breakout will be probably more complicated. Okay, because bigger patterns demand more time for the breakouts to be developed and actually be executed. Okay, I don't know how and why it came back. Okay, what's wrong with it? My Wi-Fi is playing with training view. Okay, so SMMT, it is a very decent break to the downside, guys. Okay, in a sense, it is the kind of setups that this is the kind of candles that I want to see breakout. I would say that this is a bit unusual candle. I would prefer something like that, like this candle. Okay, in regards to its size. I will need to see how it plays out. If I take the position at this point, stop loss will probably be at the pattern boundary. Okay, I do not expect price to come all the way back up to the pattern boundary. Okay, it would be not a good sign, I'd say it in like easy words or simple words. And actually the risk reward is not sufficient. So, and we also don't have the 10 to 15%, which implies for double measure target. If it was the case, I might consider the trade, but with 1 hour's potential profit, I will probably pass. I'll probably pass this trade, but I still need to see and wait for from day close to make final decision. UWMC, It looks good. Rectangle to the upside, continuation of the prior uptrend. We need to see strong break above this swing high, and that's it about this pattern. Open positions, guys. So mRNA, which is a position that was going pretty well, but today is coming down pretty strongly. Currently I manage it by trailing ATR trailing stop. Okay, I'm taking 3 times the 10 period ATR. I am not surprised that I'm seeing some kind of pullback after this very strong move to the upside. Okay, when I do get these kind of strong breakouts, I do not want to close them at the measure target. I want to give price room to move higher. As the all-known saying goes, cut your losers short, let your profits run. So this is the case with mRNA. NZ, New Zealand dollar to the Swiss franc, moved the stop loss to this minor low, and I'll need to stay and wait to see how things are developing. Okay. We have some kind of combination of a rectangle and ascending triangle coming off the lows. Very good looking setup. Several touches at the pattern boundary before breakout. Guys, when I'm speaking about a clear breakout, this is the kind of price action that I am speaking about. Okay, decent close, another decent close at or above the entry point, and a continuation, small pullbacks, continuation higher. Okay, this is the kind of setups that I want to trade. That's all for today, guys. I believe that I'll manage to make another video as the weekend review, where I'll go through trades that I entered during the week, what happened with my open positions, and a quick review of the short and the active list. I hope you enjoyed this video, took some trading insights from it, and I wish you a good trading week. And I believe that I'll see you on Friday. Bye bye.